Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the market broke out to new highs on pretty decent volume, and so far we have to assume that the market is going to continue heading higher during the day session. Now on the econ calendar, we have the new home sales number out at 9 a.m. Central, which is a potential catalyst. But from a technical perspective, this is a breakout to the upside, new all-time high, and it's happening on relatively decent volume. So for now, we have to assume that this move is going to continue, and at the very minimum, we are going to test above the overnight high. So that 99.5 to 2001.5 initial resistance zone is a high odds target on the upside. And we also have to keep in mind that there is no hard resistance at this point, right? ES is making fresh all-time highs, so there is really nothing holding ES back. We saw some weakness in TF last week, but then TF actually started putting in a catch-up move on Friday. We saw some buying in that market, and at this point, I'd like to see a breakout in TF above the 69 to 70 area, just to kind of confirm this upside strength. But aside from that, as long as we don't see any big failure in the other markets, we're going to stick with the assumption that the market, the S&P, is going to continue higher as well. So ideally, if this is going to be a valid breakout and it's going to stick, then ideally ES holds above 90 to 92. Now, it can pull back and test a little bit lower, potentially fill the gap, and even test 84 to 86 and still actually be okay and still actually reverse back up to the upside. But the ideal scenario is that we don't really see a move below the overnight low, that 90 to 92, which covers the previous highs here over the last couple of sessions. They hold, and that would just kind of confirm the upside strength and the buyer strength, and open the door for a move higher above 2000. So now, as far as S&P 2000 goes, it's a milestone. We could get a little bit of selling, but I would not want to step in front of this. First test, there can be a little bit of selling, but typically we will go higher. And S&P 2000 is a big round number, and like I said, there could be a little bit of profit taking there, but most likely it's not just going to stop at 2000 on the dot. Most likely it is going to continue higher and run some stops and have some momentum behind it. Even if it's going to reverse, I think it's going to go higher before it reverses. So at this point, the safer bet is to stick with long setups, be cautious on short setups. It doesn't mean we can't take short setups, but they have to be evaluated in real time, and we need to have some pretty good evidence in real time supporting the short idea. So, the internals, diving to the downside, or the momentum being very obviously driven to the downside with the NYC tick holding below zero, things like that. If something shows up like that after the new home sales number, then there is potential for shorts, but the safe bet right now is to either identify some good long setups on pullbacks into support, or just step aside and let the market head higher. But shorting this market is a pretty risky bet right now, and we're not going to focus on that unless there's some very clear and obvious signs in real time supporting the short idea. So right now it's going to be about cautious long setups where we're getting good trade location on the smaller time frames. The smaller time frame inflection points, midpoint VWAP, potentially a pullback to the overnight VPOC, or the 90 to 92 area. Those are areas where we can consider taking a long setup. And of course, as long as the real-time context is still supporting continued upside as well. So, the internals are still holding up well. The NYC tick is holding up well. We're seeing continued momentum. TF is still holding up. All that has to happen. But the safer bet right now is to stick with long setups, be very cautious, or avoid short setups completely. And this might mean sitting out of the market for now, because you might not find a good spot where you have really good reward to risk to jump on board. So, right now that is the context, and I think it makes sense to preserve capital rather than be aggressive at these all-time highs. So those are the main ideas heading into the session. Let's see how the market holds up after the new home sales number, and we'll take it from there.